Welcome back to the lab. I'm here with my good friend, Nikki Lamb. Nikki is with Lawyer's Title and 20 years experience inside the real estate industry.
Yes, I can't believe it's been that long.
You know, it's kind of crazy. I think about, we were just talking about like when we got in the business and all the highs and lows and the people that we've seen kind of come and go. All the personality types that we see come and go, you know?
Yeah.
It's always an indicator of what the market conditions are like.
Okay, how so?
It gets real flashy.
It's true.
And there's tons of networking parties. And there's no business at networking parties. Just my personal opinion.
Just parties and drinking.
It's just reasons to get together and celebrate and say that we're doing great, right? But it's really a reminder to me of like the 1920s when it's like the beginning of the end.
Like the Roaring 20s.
The Roaring 20s.
Going into the Great Depression.
Money's never going to stop. It's flowing so easy. It's the good life. It's everything.
Yeah.
And so whenever I've witnessed that within the industry, I have to take a step back and be contrarian and be like, wait a minute, time out. I'm not bagging on real estate agents nor lenders, right? Because I saw it with the lenders. 2020 interest rates were super low. We used to have the memes, what color is my Lambo going to be, right?
Wow.
Just because of that kind of thing. But recognizing that rates are so low, that's where the volume came from. So it wasn't like they were hustling any harder. They just got the wind at their back that allowed them to get that much extra more volume because the market conditions just happened to be in their favor.
Yeah.
Right. And so whenever I see a run up in terms of price point, as a good example, when your original average transaction, let's say, was 600,000 and now your community is selling for $1 million, you just got a 40% pay raise. You can still close the same number of units, but you got a 40% pay raise. So it makes you think that, oh, I'm really doing great. I'm killing it. But because of the market conditions, it hides a lot of that. And then as soon as the tide rolls out and it's harder to sell property, it's harder to have those harder conversations of how to price your home correctly or how to talk to your buy-side clients on interest rates going up and affordability and saying, hey, you know, instead of buying that single family, we're going to have to start looking at condos based on your budget. Most people didn't have the skill set because they hadn't gone through that harder turn of the market to have those conversations. So
I remember in 2008, actually I got in around 2004-ish, a little bit earlier. Anyways, fast forward, I remember how scary and depressing it was. My day, and when I call it routing, it's literally every office to stop in to say hi. And I just remember going to so many, especially my lending offices, and then just the doors are locked, no signs, back then they even have a daily lenders added to the implosion. The
ML implode, yeah.
Oh my gosh, that was so scary.
Yeah, and that was kind of scary. I was all up in that like ML implode just because.
And then you see like the big box, like the Century, was Countrywide.
Oh, a New Century.
New Century. It was just, anyways, big lenders. And
New Century, Countrywide.
That's what I was
even
thinking.
before New Century was like Long Beach Mortgage. They were the ones doing the stated first, and then First Franklin.
And then I remember, this is where it's going to segue to where we're talking about. I remember, this is so weird. You know how every year the city assessor, the county assessor or city will assess your property value, right?
Yeah.
And I remember back then sending comms to homeowners who are now going back to the assessor's office and saying, hey, because they're so used to adding on a little increment every year.
Yeah.
So now you have to go to the assessor's office and say, no, look at these comms. My property dropped by $200,000, $300,000. And then the assessor's office, shockingly enough, will revise it and then send the homeowners back money if they had already taken it, or send them a revised tax bill. And I haven't seen that since. And I hope I don't see that ever again. But that's just.
I think it depends on when you bought and where you bought.
Yeah.
And the price you bought.
Yeah.
Each market, based on the echelon where you're buying. So like if you're going to get the higher desirable area, like a Pacific Beach or La Jolla.
But no, back then, that's what I was saying. It's so crazy. Like, I can't believe I love what I do, but I can't believe it's 20 years. But I do remember thinking, wow, this is crazy. Like even the assessor's office wasn't used to that. That homeowners are coming in and actually renegotiating and saying, hey, it's not worth as much. You need to assess it less.
I don't think a lot of people know, though. I don't think a lot of people understand what even triggers an assessment. You know, and I have that difficulty often, especially now with the whole advent of ADUs and building on properties, or guys flipping properties and they add the extra bedroom and bathroom. Then it comes to my desk and we're sitting there doing the financing on it. We're looking at the appraisals, and of course it's done with permits and the whole nine, but they never went back and got the property reassessed to show all the work that they've been performed.
Well, there's this like a twofold question here. Reassessment, let's just take ADUs out of it. Anytime you do square foot added to your home, you will get reassessed. The question is by how much? And when at the time of building, I built an ADU. At that time, there's a form, and I forgot the name of the form. They ask you how much you think you spent, or how much you spent, and how many square feet did you add on to your property. Then they're going to send you a new reassessed tax bill. Okay? Now, what I've learned and what I've been doing is the assessor's office doesn't necessarily talk to the planning department. Did you hear what I said? They don't. Yeah. Left hand, right hand doesn't necessarily work together. Yeah. So with that,
that's a really big distinction, though, because I know that people, right when they get that final job card, they think they're done. They're like, yeah, sign off, awesome. Yeah. I got my final job card. Yeah, go ahead, move in, do your thing.
Still up to the homeowner. Even though you get reassessed tax bill. Yeah, yes. You get the bill. You may get the bill. They're really behind, so maybe a year later. But it's still up to the homeowner's job. I wonder if I pull up my app right now and see what my square footage is. Maybe we should try.
You should try it. Real time.
In real time, if my property square footage, my ADU is added to my property, okay? Because it's still up to the homeowner to go and get that, notify the city appraiser to see, hey, I added 500 square feet. Okay, let's see.
Yeah, but you know what, though? Usually I hear it from the appraiser. So they physically go out to a property and they start taking the measurements and whatnot, and then they'll say, based on what public record's showing, is not matching with what I'm verifying. I'll get copies of permits showing that the work was done, but they never went back to the city to get the actual description of the property updated.
Correct. That's why I was saying it's up to the homeowner, and title could check, like we do this thing called the property characteristic. We have an app that checks, and I'm actually checking my own right now. Everything looks good here, but the characteristic is not updated. But it's okay. I have time. I'm not trying to sell, but if I want to sell, I should go and it's very easy. It's free. The public can just write to the city appraiser and say, hey, I added 500 square feet. Can you please update that? Bring it to the realtor so you guys can have that.
Is there a penalty for that, though? Because let's say I just did a build and I did it 2 years ago and I never told the city assessor that I did my build. And now I want to go sell the property.
It's not, I don't work for the assessor's office, but I don't see how it's the fault of the own homeowner. Like, you did everything you're told to do, sign offs, paperwork, right? But if they fail to update it, that's their bad. Like when I was building my ADU, I did fill out the form that shows how much my valuation is, and then I did add how many square foot. Like I added on to my home, and then you send it to, that's separate. That's to the assessor's office. That's how they are going to add that to your property tax.
Yeah.
Now, your other question you asked me is like, so what can trigger ADU is like a self-voluntary trigger, right? Not everybody deals with ADUs, but if you're dealing with ADUs, be aware you will get reassessed. Every city and county wants their money, right? Now, my day in, day out stuff that I get a lot, and I probably get this 3 times a week, is partnerships in and out of a trust. My brother, my sister, my friend. Nikki, what triggers reassessment? I want to add my mother. I want to add my brother. Well, anytime you change title, and then in layman's term is anytime you change the name and ownership of a property, anytime, whether you get reassessed or not, it will trigger the assessor's office to take a look at your file. Okay?
Now, I think people need to understand that title in the real estate industry is very similar to like the DMV.
How so?
It's a repository of information. So, you go to the DMV and they have let's say your car, any tickets, anything that's gone on with that car, previous change of ownerships, all that, the chain that in the DMV is a little different for cars because you're going through the state of California's department. But for title is privately done. It's done through individual corporations that will do the homework of looking at chains of titles and ownership, and then they're ensuring that information.
When we talk about title, we as a title company, right? We ensure if there's a and B buyer and seller, right? We're in charge of ensuring that, making sure that before we transfer ownership to the buyer, that there are no liens. You check the prelims, no judgments, all that clear, great. And then also the lender requires it, especially if the buyer has a loan. The lenders can require lender's policy. There's a homeowner's policy, lender's policy.
It's basically the protection for all parties in terms of who has legal ownership of this property.
Like I would not buy a property from any seller on a handshake and be like, we don't need title insurance. You can trust me.
Yeah,
I would never do that.
No, I made that mistake before. Yeah.
Yeah, you don't do that. Now, if we're going back to property tax reassessment, okay, here's the issue. You buy the property in 2010. I'm just going to say easy math, $500,000, right? And right now it's probably worth $1 million.
Okay.
If I bought it by myself as a single woman, then great. But let's just say I want to add my brother on today, real time today. Husband, you're actually exempt.
Okay.
Believe it or not, you're exempt. My brother. Okay. I'll give some exemptions. But if that's today in real time, I want it in October 2023, I want to add my brother for some reason. Maybe he lent me some money and to collateralize it, whatever.
Yeah.
But I bought it in 2010. It's worth $1 million. Well, guess what? The minute you add anybody to title, a name, the city, the assessor's office will get triggered right away, and they're going to review it because they want to collect their money.
And they want to know why.
They want to know why. That's why there's a form called a preliminary change of ownership. You fill out that form and you put the reason. Even if I put, it's not a sale, just adding a family member, they don't care. That is going to trigger it. And from in real time, I'm going to get a new bill, a higher tax bill. Let's hypothetically say I paid $500 back then. It's worth $1 million now because I added my brother. I'm going to be paying property tax on $1 million now. Okay. And you brought up, about husband. There are a couple exemption codes. Husband and wife, wife, husband, wife, wife, whatever. In and out of a trust. I bought it as Nikki, a single woman, right? And I want to put it in the Nikki trust. That's an exemption because the same ownership, I'm still the same owner. I'm just putting into a trust. So I don't get reassessed. Now, parent to child, it used to be cool. It used to be exempt before 2021, February 2021.
I was going to say, I thought it was exempt. Yeah.
No. It's exempt to a certain extent. So I just want to preface, I don't work for the assessor's office. This is just from experience.
You're looking at title all day. So.
Yeah, and this is just from experience. And everyone please verify with your local office, make sure what the rules are, if it applies to whether a city, county. So I don't work for the assessor's office. But in 2021, prior to February 2021, parent to child is exempt. You can give it vice versa. You didn't even have to live in it. And forever, people can give their whole investment property to their kids, add their kids to title, and voila, you're good. That's not the case now. You cannot do an investment property. Okay, after February 2021, you could only be exempt if the parent, the grantor, is a parent, right? Or vice versa, a child. Whoever the grantor is must have to live in that property. They have to live in that property. Okay? And the grantee, whoever's receiving it, has to live in that property within 1 year of receiving it.
Would it make sense for people then, since if you put property into a trust and then just do something within the trust?
That, you'd have to talk to an attorney about that. Yeah. I don't know the ins and outs of trust laws.
Because at least if you have it in the name of a trust, at least from my thinking is that would prevent it from triggering something in the tax assessor's side, because the entity is still the same.
Just changing out the beneficiaries and the
changing
trustees.
the beneficiaries and the trustees is in the back end. So it doesn't. So you're technically not changing title ownership.
No, that's really good. I'm not going to lie. I've thought about that myself.
Yeah.
But I'm not an attorney, so I can't give advice. But I actually think it's really good. But definitely check with your attorney, because then you're not triggering the actual vesting of what's on title.
The reason I say that is because a lot of times, like commercial property, a lot of commercial sellers do that.
Correct.
They'll do like a seller carry where they create their own loan against it, and then they'll put the new buyer into the LLC, and that way they can benefit off of the original property tax basis without changing the title ownership. I just see it in commercial, and it's weird how you see it in the commercial side, and it starts trickling into the residential because they start getting craftier that way.
So what we do as a title company, we don't stop people. We're not the police. You can give it to your dog if you wanted to, but we that's outside of title insurance, okay? We only do the vestings and escrow while you're in escrow, whether you're doing a refinance, a sale, or a purchase, right? That's when my company gets involved. But I get hey, Nikki, will I get reassessed? And I always get these questions after we close. After we close, I'm no longer, we didn't insure that anymore. We only insured that it was Jane Doe, a single woman, on that property, right? But if you're going to add someone, we're not going to stop you. You have to go to like a paralegal, an attorney, or a doc prep company. Add that on. But this is why title companies don't get involved in it, because we don't want to get blamed. Oh, you did this, now my property is reassessed. And I think if you're going to do it within the year of purchasing or selling, that's fine, because how much the property value didn't go up that much, right? Don't be afraid. If you have to, I mean, again, I'm not the police of title vesting here, but if you have to for whatever your reason is to add that person or remove that person, try to do it within the same calendar year. Don't wait 10 years. Because, oh boy, you already know what in 2020 to now, property value has gone up at least 15%.
What would happen if property's values went down and then you added a sibling onto a property? Would that reassess it to the low end?
Yes, it does. But I've only seen it happen once.
Well, that'd be kind of cool. I guess that works both ways then.
I've only seen it once, and that was during in 2008.
Oh, okay.
You know, I remember I myself went to downtown. I tried it myself. I owned a condo, and I went and I showed them the new comps. I filled out a form, signed it, and said my value is not worth what you think it is anymore. That's
a good point, though. I think a lot of people that had purchased in 2000 and 2022, because interest rates were lower, so obviously the market was a lot hotter, and we're starting to see value starting to level off in some markets. For them to keep an eye on it.
I don't know if now is a good time, because I still see prices are high.
Prices are still there. For sure they are.
I don't see it dropping like it did back in 08. From 05 to 08, there was a huge drop.
Yeah.
But right now, you can try. Of course, go to your assessor's office and try, but I don't see that they're going to recalibrate.
We still have a few more years for this market to start right-sizing, but it's going to be for a really, really weird reason. I don't think people are going to understand why it's going to right-size, which is kind of weird. So I had, you know Sydney, right? Sydney.
He's the appraiser?
Yep. So he came on with me, and we're talking about this. So what's weird is, let's say a year ago, you can have a specific zip code and you can have 20 properties on the market.
Yeah.
So now you got 20 comps in the last 90 days. Easy. Great. Now, because inventory is so thin, you may have like 5 in a zip code. So now you have a weighted average of 5 versus 20. 20, you can start picking and choosing which comps you really like and make a case why they're so indicative of the value. But when you're down to 5, that's 20%. So if you have one that is a fire sale because it's a divorce or it's they're starting to go NOD or whatever, and they got to fire sell the property, equity is such a make-believe number that now you have one, if not maybe even 2 comps that just got dropped quickly to try to get that house moved. So when we had a lot of inventory, especially in the bank-owned stuff, the bank can corner the market. They can say, you know what, we're not dropping the price less than $700,000 for this house, and let it sit for 60, 90 days, 120 days, because they can corner the market like that. Plus, if you had a short sale, you still had to have the bank approval on it. So it wasn't like prices could just collapse quickly. We saw people walking away from property that had great credit scores because they saw the neighbor down the street selling theirs for 150 less. They're like, I'm not getting stuck in this house. Screw this. It's not worth it. And they did strategic bails. They'd buy something new and then dump the old one, but have a new one in hand at a cheaper price. I saw that happen all the time.
I saw that a lot in 08.
Yeah.
I did. I saw because their payments were ballooning. It's crazy. They would buy the new one and then let the other one foreclose. Yes.
Yeah. So we saw that a lot. But where we haven't seen this kind of market condition has been since like the early 80s. So when interest rates are going up, right now like 8%, but let's just say they start going to 9 or 10, the potential buyer at that monthly payment starts to get really, really thin. So now you're choking off the buy side versus surplusing the sell side. So you took off the buy side. If buyer demand really drops off, like Austin right now, I heard is really, really dropped off. Like the demand just dropped. In 6 months, double inventory. 6 more months, double it again. You got 400% increase in inventory. But the buyers looking to get into the market has started to dry. So it's allowing the inventory to build, right? The last time we had excessive inventory and tight money supply only because we got rid of all those really loose loans, right? Mm. So this is going to be such a different market for us to kind of experience where we have very few.
Are you hopeful that people can go back and try to reassess for lower? I hope to not see those days again.
I mean,
I don't want to see it because it was hard to say. Sad.
Well, because I think like certain market areas like that are more in redevelopment, Logan Heights, they have a high property tax rate. Like theirs is higher. I think they're the highest in the county. They're like 1.25% for some of those neighborhoods. But they also have to pay for the local infrastructure, like the schools and whatnot. Mm. So I don't know. The whole 1% assessment, I don't know if it's going to stay much longer if they got to keep paying for the infrastructure.
Yeah, I mean, that's the separate topic in terms of who we elect and all that. But I mean, for what I've seen, from my experience, I've only seen it once in my whole career of it being reassessed for lower.
Yeah.
But do know that anytime you make a change and you're vesting, they're going to call you.
So one question for you then. So I've tried to explain this to clients when issues have arisen, when especially during divorce situations. They have clouds on title. So maybe they purchased the property and at the time, or they refinanced the property and at the time they said they weren't married to try to facilitate the transaction, but realistically they were married. If now they're getting a divorce, and the wife says, "Hey, wait a minute, I'm due on that property," but yet they don't show on the documents as being ever married nor signing a quitclaim deed. What happens in those kind of situations?
For title, well, we're, hopefully you're truthful when you get the loan, right? Because it's usually even in front of a notary, you're saying that you are a single man. Mm-hmm. So title doesn't get involved in that, but title does get involved with if we know that you are married, right? We have, this is my favorite word, statement of information, SI, also known as an SI. If we know that you're married, even if single, married or not, we always have everyone fill out an SI, always, right? And hopefully you're being truthful about it. So if you are married at that time of that loan, you on the SI, there's a form, there's a section for you to fill out your spouse's information. And then title would then run it, clear it to make sure you are who you are and that you or your spouse don't owe anything else that's tied, because that's what we do. That's like our last, I don't know.
Date down?
Not date down. It's just our last one more precautionary measures to make sure there's no, there are no liens. In the refi, in a sale situation. But if the person lied that they were single, we wouldn't know that, right?
The one I get pinged on every so often is child support.
Oh, it's a judgment. It'll be on there.
Yeah. But when they have it from like another state, they come to California, they don't declare it. And then down the line, we're about to close.
It comes up on the
SI. And then it pops up.
That's why we ask for SIs. It'll pop up because it's linked to your driver's license. I know it's a different state, but then it's always also, we definitely check, it's linked to your social security number.
Yeah. That's right.
And
that's
this
right.
is why we always tell our clients, like when you're taking a listing, just get the SI. You already have them sign everything else. Add that in. Escrow sends it out to your seller too, but why not help escrow, help title, and just get it out for us at the beginning?
If they can get it out day one, that would save me from having to rip my hair out.
Yeah, because if you catch these things, it's going to take you at least 2 weeks to clear.
Yeah, it did.
And then escrow has to call for a demand, find out how much the total cost is, and it's going to affect the net.
Yep.
Right?
The last one I had, the guy had child support for like $4,500 in another state. Going through escrow, everything
Luckily,
was
that's
perfectly
not too
fine.
much.
No, it wasn't too bad. He was
amount.
really tight on funds.
Yeah.
But yeah, we were just humming along, ready to close another transaction, no big deal, like a regular day. And then bam, hey, your borrower has da-da-da-da-da in the state of Georgia, and there's a $4,500 balance.
Yeah.
And I'm like, what? Damn
Yep.
it.
We tell you. I preach that all the time. Every listing, please get me the SI back.
Yeah. I see that, or I see undisclosed properties, land that they got from their inheritance, or some condo that they got in inheritance. They don't necessarily want to claim it because they think that, oh, well, it's free and clear. I didn't think I had to tell you my debts. And I'm like,
well, that's for you guys. Yeah.
Yeah, for me, it's big time.
For us, we don't care what you own. We just need to know what you owe.
Yeah.
We don't care what you own, just what you owe.
Yeah.
And it's making sure that you don't owe anything on this property you're about to sell, or to anybody else. If there's a private Benny that we're not aware of, if you borrowed money and they didn't record it, we didn't see it on title, it's not on title, it's not our fault. It's not official until it's official. Yeah. But yeah. So anyways, those are all the crazy stuff I've seen in what I do. I love what I do, but the reassessment part is like the number one thing. People just, for whatever reason, they need to do is change ownership all the time. Even from myself, like putting into an LLC, even if it's just for yourself, trust me, you're going to get that call. They will call you.
Yeah.
They want to make sure that the membership of the title, like the vesting, didn't change. Even if you change, like I said, I put myself and then I added into an LLC and then I added my brother 50%. Well, guess what? I'm going to get reassessed. They want their money.
So I think another thing that you kind of brought up was like doing things like that where you put it into an LLC. That people really should do those through the title company versus going to like a FedEx and going through like a basic little notary service.
To be clear, title doesn't help draft LLCs or trust.
Yeah.
You have to have that in place before you purchase, at that time of purchase, right? And if you're going to buy something and it's an investment property, it depends on your lender because I don't think every lender allows that.
Yeah.
Right?
As far as loans, it's a very specific type of loan that allows on LLCs.
Okay.
But like even like family trust. So if they go, if they go and they think that it's like just like the Susie Orman instant, hey, let me do a family trust. Awesome. I got my paperwork. Let me go to
you can buy in a
FedEx
trust.
to
It's
record
great.
it.
Do it. Well, I think what you're trying to ask me is the uninsured affidavit, right? Are you talking about when after you close?
So like that's typically what it is. So like afterwards, it shows on title, but then I have a problem with title because they didn't do it the right way. They didn't actually go through a title company to get that notarized because they'll ask many times.
Right, and then we asked you to have the other person sign an uninsured affidavit. That's every titles company's way of protecting themselves and also protecting the grantor to make sure that, hey, Anthony, did you intend on giving 50% ownership to Nikki? What if you weren't aware? What if somebody forged your signature, right?
Right.
So we do that to protect everybody involved. So the uninsured affidavit, I know the term sounds scary, but it's not. It's just to be safe. Now, hoping you're on good terms and you're like, oh no, I had it notarized at a UPS store. Okay, cool. Let's go back to Anthony. Let's send a notary, a title company approved notary to go back to Anthony and ask him, can you please fill out this form? And then there's a doc number and everything on there. And if you guys are cool, then there's no problem signing it again.
Yeah.
But a lot of people get mad at us when we do send people out there like, why? I signed it already. Yeah. And I always tell them it's actually for everybody's protection. Wouldn't you want to know if half of your ownership was given to somebody else? Right? So then if it was a fraudulent case, you would thank us. Right? And there are situations where it's divorce or siblings or business partners that don't talk to each other. Mm-hmm. Yeah, that part I could see why they're upset to have to go back and sign it.
What happens in cases like that where if they don't want to sign a document?
It's really at the discretion of that title company, but usually we will try to locate the person and then send a title approved notary out there and we'll tell them the same thing. This is just for your protection. This is actually good for you. You relinquish all your interests, right? I mean, we just want to make sure that you did relinquish it. And, you know, I haven't had it happen where they're like, no, I'm not going to sign it. You know, I've had cases where they have passed. And then that's another, that kind of, it's kind of like if you answer B, then you go down this, open this door. So it really depends on the answers. But if someone passes, that we take another measure. Okay, we have to check the death record, you know, like affidavit of death and all that. But usually I've seen people sign. If not, we are a neutral party. We have to do our job. We have to collect. If you had an attorney draft it for you, great. The attorney could type, you know, our company probably would just take an attorney opinion letter. But it's really case by case. I'd have to see the file. I have to underwrite it and let you know. But I've seen it all, yeah.
What about like when people pass away? So you have like a person passes away and now it's going to probate. So
it goes to probate if it wasn't in a trust.
Well, so it goes to probate if it wasn't in a trust. So if it's not in a trust and it goes to probate, how does the person now have the legal authority to sign for that then? Does it go through the probate attorney?
Yep. It's going to suck. The process takes about 8 months and it's a lot of money, right? All the fees regulated by the state and all that, but definitely check with the probate attorney about that. You have to go to court. And then once the judge gives us the order on who can sign, who can sell, who owns, who gets what.
Yeah.
That's when you come back to the title. Go get your agent and then proceed with it. And then we have to go with the court order.
Got it. Man, title seems, it's weird for me and I get it. You have to basically get it on every single transaction to protect lenders' interest on the loan.
Yeah, the lender requires it. If you're doing a refi, no lender is going to let you borrow without title insurance.
Right.
And then also no escrow is going to handle it because there's money in exchange of money, right?
Right.
It has to go into there's
you
the borrower,
you have
title,
to go
escrow.
through title no matter what. And even if you try to do things on your own, then you might not even be able to get title insurance down the road if you don't do it the right way.
I think it's safe if you have partnerships, if you're buying someone out. I know a lot of people don't like the idea of closing costs, escrow, but you know what? It's really for just like
it's for their protection.
Yeah, it's for your protection. It's for peace of mind too. And and then you rightfully pay this person out. You have title insurance on this.
Yep.
And title insurance escrow is a one-time fee, right? But it lasts forever. It lasts for the duration until you sell the house. It's not like homeowners insurance where you have to pay every year and your premium goes up every year. Title insurance, once you purchase that house, you pay for it once.
Now, isn't there situations though? Let's say you just bought a house and you got title insurance, and we're talking earlier about like 2-1 buy downs, and so they're anticipating on refinancing in a couple years, 2-3 years. Isn't there a way to work with title to get a discounted policy if we're going to use them again on the refinance?
No, I wish. No, because in the refi, it's done because that was with that lender.
Okay.
We're insuring that policy for that
No, I'm
loan.
saying, but what if you did a transaction? So I go
why would you want to refi again? I'm not following.
So let's say,
unless it's a rate and term.
Rate and term. So I bought a house. 3 years later, I have enough equity now to get rid of my mortgage insurance.
Oh, you pay okay.
Okay. So now I'm going to refinance. I'm just going to refinance it. If I went back to my original title company, I thought there was a policy or a way that it's like a 5-year eagle or something. Somebody was telling me about something like that. Like, oh, if you try to use us again and it's within 5 years, then we'll give you this better premium or something like that.
No, not that I'm aware of. Our company, a refi is a refi. When you're done with that, you're done with it. There's a thing called a binder for flippers.
Yeah.
right? Flippers can buy it. You have 2 years, but it has to be an investment property.
Oh, okay.
Right? If you know you're going to, actually, it doesn't have to be an investment property, but if you know you're going to sell within 2 years, get the binder, right? Most of all of our flippers do that because they're not going to, that is when you do have a huge savings in your title insurance policy.
What does it do?
So it's like there's a formula that every company uses. And hypothetically, I'm just throwing out numbers. I'm so used to using my app. I have to punch this in to know this. But like, let's just say you bought the house for $500 and you added value and you bought a binder policy, right? And now the home is worth like $1 million. I'm just making it up, so don't kill me. Let's just say title insurance now for $1 million is the owner's title is like $1,800, right? But if you had title insurance, it'd be less. It would probably be like $500-$600. But that's only if you had that binder policy to that. And if you are a flipper, you need to know this.
Yeah.
You need to do this. You know?
For sure. I don't think a lot of people know sometimes like little ins and outs like that, especially because like you mentioned the flippers. I've seen so many times where you have, like talking to Mark, tenants in common, and you're doing these partnership agreements with multiple people. And then the paperwork gets notarized at like down the street at the random little notary mailbox, et cetera, place.
And that's fine. You guys can get it notarized. Just remember when you come back to sell.
Yeah.
Whoever's granting their ownership, just remember that when you go back to sell, every title company in town is going to ask the original grantor to sign an uninsured affidavit.
And what does that mean by an uninsured affidavit?
Because it was done outside of title insurance at that time.
So
you did it outside of title insurance.
So even if something goes bad, it
wasn't insured.
It wasn't insured.
Uninsured. That's what that means.
Got it.
And it's not necessarily a bad thing. I know the term uninsured sounds so
but still,
scary.
I think, because I've been in so many transactions, just in myself personally, that it's just a matter of time before something were to happen. You know, just a mistake. You think everything's going to go great and it doesn't. Then it just opens up a whole new bag of worms. And it sucks because just as simple as in myself being in the business as long as I have, hey, it's easy. I just go down the street and you can get it done by Kinko's. Awesome.
And it's not scary, you guys. The uninsured part just literally means it was done without title insurance insuring that signature. Right. Or that change, right? And you're not doing anything illegal. It is completely legal. The only thing is, let's hope 5 years down the road, that person, you still have a good relationship with them.
That's what I'm saying. Like, let's hope.
Because we're going to go back to that person and be
in
like,
5 years,
can you
never
sign
know.
this form?
I've seen things just from elections taking place where it destroyed relationships. Or COVID and opinions destroyed relationships. And then money makes people weird. And I know people go into, and I've seen this so many times, boyfriend and girlfriends go buy their first little stepping stone property. And something happens.
Yeah, I've seen that. Yeah.
Right. So to me, instead, even though I know it's a convenience and you can do it outside of title, still do it through title. Like, pay the money, go the right route.
But just to also know that our product, we only have refis.
Yeah.
Right? And sell and purchase. So that's the reason why a lot of times you don't need title insurance. I would like to charge you, but I can't. Adding your girlfriend on title later has nothing to do with that. Right? But if you are going to add your girlfriend or somebody on title literally a day after, maybe ask for an endorsement, right? But also, or instead of going to UPS, call your escrow partners and say, hey, can you send me a notary that is approved, right? Just in case.
That's the key piece, though.
Just in case. Down the road, that person, you guys are not talking anymore.
Yeah.
Get a notary that's approved.
Yeah. And and to add to that, regardless of how you think your relationship is good, whether it's husband and wife, brother, sister, aunt, uncle, money makes people weird. Shit happens. And that for different reasons and different motivators, for whatever reason. And it's such a simple, it's just a simple level of advice to just say, you know, get that extra layer. But how would somebody know unless you mentioned it right now? No, how would you know? You wouldn't know.
I know. It's unfortunate. I wish I could go.
Because then even like as a lender, I don't know how to properly advise him on something like that until you just said it. I'm like, oh crap, 20 years. I've been like lucky. I can't say I'm lucky because I've done so many transactions that I've had unlucky ones and they're expensive lessons, you know? And then from the real estate agent side, same thing. I know plenty of times where they're taking a property out of an LLC and putting in their personal name thinking it's all cool. It comes to me, now I can't do anything with it, especially on a refinance.
If it's the same partners, oh yes, that's
a whole other animal.
That's another podcast. If we're just talking about the same,
yeah.
Like I put from my individual self into an LLC, I can go to any notary because it's just me.
That's right. But because what my point is that even though it's easy enough to do, you don't necessarily know the ramifications because it's so easy to do. And nobody stops and consults with the title company and consults with the lender and says, hey, should I do this? What do I need to be looking out for? What potential can this happen to me with all good intentions? And it may sound so simple as just doing this form, but not knowing, well, I just read Rich Dad, Poor Dad, and it said to put my rental properties in LLCs, and I've had them for 5 years.
Well, the best thing is if you do that, and I recommend pay a little bit more. If you don't know your relationship, you may be good now, right? Then go have an attorney draft it. Have an attorney. If you don't want to, a lot of people don't know, and you're right. I don't know how to get this out to every person out there. If there's anybody listening to this, like what you can preventative is, okay, then have an attorney draft it because the title company will that will be valid for us.
That would be valid.
Yeah, have an attorney draft it. Have an attorney. Usually, most attorneys have notaries in their office.
Yeah.
Or whoever they prefer, do that too. That's another safe way to do it.
I think now it's funny that bringing up the Rich Dad, Poor Dad thing and how the advice in that book recommends taking your investment property and moving it to an LLC. But it has no explanation in terms of triggering your taxes, triggering something that's not insurable on title, or the lending side. Now I have 6 months before I can refinance you because now you just did this change of ownership. Oh, by the way, now you want to cash out. Now it's 12 months you have to wait.
Yeah.
For something as simple as, oh yeah, I just did this form. I got it on Susie Orman and I went down the street, paid my 15 bucks. Around. Yeah. But you get what I'm saying? It's like such an easy thing because you read it in these books and you read it and you see it, but nobody takes the time to actually ask people within industry professionals, how is this going to affect me? And
yeah, I always recommend, even outside of title, if you're going to change, add or remove title, call your local assessor's office. Actually, even better, just walk in. It's faster. The 1600 Pacific Highway here in downtown San Diego is so fast. Just walk in and ask them. Okay? They're technically not allowed to give you advice either, right? Because I have tried. Trust me, everything I've said here, I have tried because I want to know from my own experience. Just bring it down there and ask them, how do you figure a reassessment? There is an assessment office dedicated to this. And then there's a tax office down the same hall. But the tax office doesn't get any of that until this is done. Yeah,
and that's a great point. The assessor's office and the tax collector's office is two different departments.
They're literally on two separate ends.
Yeah, and they don't necessarily talk to. One's just, hey, I just collect the bill.
And that is the tax collector collects the bill based on what you mark on your preliminary change of ownership.
That's right. That's right.
So
these are my experience. It's all one umbrella, and it's not.
It's not. There's actually three. There's a third part. There's a third department, which is the recording office.
Yes.
This is just my experience of what I've seen in 20 years of doing this. I do recommend before you do that, definitely talk to your CPA. talk to the
real estate
assessor's
attorney.
office, your real estate people.
Yeah.
Just make sure you cover all your bases, okay?
Yep.
I'm just giving you the experience of what I see.
Yeah.
Without even having to even open up another book, I'm telling you, whatever you do to change it, even if it's from yourself to yourself,
Yeah.
it's going to trigger a possible because you still need to prove why you are changing it.
Moral to the story is just don't assume.
Yeah, just ask.
If I was at home right now, I'd literally say write down at least 5 specific contacts. Pick a reputable title company like lawyers. Okay?
Thank you.
So reputable, and not only just a reputable company like lawyers, because there's mom and pop ones that do subtitle. Pick a big one. Pick one. Pick
It's been around for a long
been around
time.
for a long time. Real estate attorney. Get a referral for a real estate attorney that can actually help and explain some of the facilitation of that. Go down to the recorder's office, assessor, and the
taxes later.
The taxes.
You don't get triggered until everything's done.
But still, go down there and get the information because it's a simple form, $15 notary fee, that it's so simple that you can actually screw something up that will cost you thousands and thousands of dollars.
Know the ramifications
Yeah.
of whenever you do a vesting change, right?
Yeah.
And again, I just wanted to say, we see it in title. We are not in charge of it. We're not policing it. I don't want people to come to me and say, Nikki, you said this. No, all I said is know the ramifications of what triggers reassessment, because we insured
You just deal with the facts.
I deal with the facts.
You just deal with the facts.
As an individual.
This is what you provided, and this is what we're saying.
And this is
happened.
who I'm insuring, and what
That's
you
right.
did after you close escrow.
That's why I'm saying you guys are like the
idea.
DMV of the title piece, because you're just like, hey, this is what happened, and this is what's happened for the timeline of your property. Mm-hmm. But without stepping out of lane, you're like, just take into consideration some of these things you mentioned.
Right.
People don't know.
Yeah.
I have yet to see somebody in the real estate industry talk about some of the details that you talked about right now. I swear to God.
I'm happy to talk about it, but it's not a fun topic, and not many people want to know.
It's such a technical piece in the process, but it's one of those simple things like not tying your shoelaces. You know, you trip and break your ankle. And it was such a simple thing that you think is just, well, what do you mean? And not knowing the chain of events that you can cause.
Oh yeah, you can cause all these issues if it's done wrong. Oh my gosh.
Just under the assumption, because it's so easy to do.
Yeah, it's easy. You can do it wrong by saying, I don't know. I don't even
misspelling.
Oh, that's an easy fix. That won't trigger. But like at that time, you removed it. You granted somebody, but you didn't state your title.
Yeah.
Are you a single man?
I had an APN number wrong on one.
Oh yeah, that happens.
And it was on the divorce.
Sadly, that happens a lot.
And it wasn't on the divorce.
Mm-hmm. That happens for various reasons. But you know, the moral of the story here is just make sure you talk to the right people.
Yep.
I'm happy to, if you have your clients call me, I'm happy to advise on who to call. Other than that, and when the file does come to me, if you're the listing agent, if you're a listing agent, please get your SI out ASAP.
Yeah, please.
Please. Lenders, refis. Yeah. You too. You need to get me an SI. Get me an SI ASAP, please.
Yeah.
Okay?
Yeah.
But yeah, even before you go to your listing appointment, agents, call your title rep, call me, and let me check to make sure the vesting is who they say they are.
Yeah.
So you take the listing correctly. That's it.
Yep. Awesome. Lab, thank you for coming in today.
Thank you.
Hopefully you guys got something at home. We're out.